Good morning everyone and welcome back to this new edition of the Daily Analysis. Let's start as usual with a recap of yesterday and it was a day that basically continued in the same direction as the start of the week. Yes, there was in short a retracement during the night, perhaps just to test the air area of highs recorded on Monday, and then in short the promotion continued a bit on all the indexes, so a tonic situation for the stock market, so we have to take note of it. Today we have a day ahead of us with some macro data that could give impetus to some movement, but I've been saying for a while now, the market at the moment is a little more news driven than data driven, so the movements that then develop following the data are sent in this period a little less broad than what we were used to in short for about 6 months in short ago, which was where the data were very much a market mover. So with that said, basically today we have just before the market opens at 2:15 p.m. I'm referring to Italian time. Of course, we have the non-farm employment data. Then there's the ISM non-manufacturing index and the ISM manufacturing index. And then there are the crude oil inventories. So it's a day with quite a few macroeconomic data releases, so make sure to note the times when these figures are published, because it's a good idea to be prepared and protected in case of any sudden market movements. With that said, let's take a look from an operational standpoint, starting with the Nasdaq. The situation at the moment is basically one of waiting, with the price movement holding at the highs in a sideways range. It's 9 o'clock right now, so the European markets are just opening at this very moment. We'll see how things develop. I think basically the range is fairly well defined this morning, so we can identify it between RD0 and SD0 for today, so let's keep an eye on these levels. In short, a break of SD0 could lead to a test of the VIX area of, not the VIX area, I meant the BC3 area, sorry, this BC3 range. And with this BC3 level, basically 21,550, a test of this level could easily happen, and then the movement might continue. Obviously, if this level were to be broken, there could also be a test of the lower area. Perfect. Well, let's move on to the here comes the sun from the pole. Here he is. The situation is about the same. We're still in this area here. Again, we can try to identify it maybe with a bit of extension between RD0 and SD0, the range from this morning where we'll probably stay until the open. So let's keep an eye on these two boundaries for a possible continuation to the upside, or maybe for a test, just like the BC3 area marked down here as with the Nasdaq. This is also valid for ES, so it seems rather unnecessary to add more. The chart is nice, clean and clear, at least according to my trading concepts. So we've broken the level, it's consolidating, there could be a test for a continuation, and if the test of the support level fails, obviously we'll go on to target the lower levels. So absolutely straightforward. Let's move on to the other two American futures, starting with the Dow Jones. Again, these are pretty simple days in the sense that the charts are all more or less aligned. There are no outliers or asynchronous at the moment. As you can see, the Dow Jones is also moving sideways right now at the highs recorded yesterday. So here we need to monitor RD0, and here as well RD0 and SD0, so that we have the range that can determine how the day will unfold. So as usual, we work this range top and bottom, and if there's a breakout, we update our strategy and go directional, maybe towards a test of the BC3 area, and then if there are further breakouts, the price could go even lower. A similar situation for the Russell as well, which we look at now. Although the Russell is actually even more lively, as you can see in the upper part of the range. It's already trying to break out, and it's only 9 in the morning in Europe, so this the strength of the markets is still there. These are the first signs, so let's also keep an eye on this range for the Russell, which right now is retesting the upper part of this range from below. A breakout could easily push prices into the area, obviously not instantly, but into today's high area, which is around 2140. On the downside, of course, we're keeping an eye on SD0, which, by the way, lines up with this nice volume node here, definitely significant. Let's look at the DA, the DAX, which has just opened and is continuing to hit new all-time highs. Even yesterday it had a really strong rally, although it still isn't being supported by volume. I've been pointing this out for a while now. The volumes on the DAX are really very, very low compared to my standards. But we really have to take careful note of it. And yet the market keeps rising day after day, and well, it continues to move toward the highs it reached just last week. All-time highs that we see here around the 24,400 area, more or less. And well, we have to see, because it seems like this momentum wants to update, wants to reach new highs again. So we'll see over the course of the week if it gets there and with what strength. I repeat, the only problem I notice right now on the DAX is the somewhat low trading volumes. Not just a bit, actually very low. So that being said, in terms of range, we are already beyond our dawn, so it's actually going to test our dawn within the first 5 minutes of the open. So right now, let's keep an eye on RD2. A break of RD2 could easily push prices up to the high area around 24.4, which more or less corresponds to the all-time high area. And there, for sure, some sellers will show up. But honestly, I'm not sure how worthwhile the DAX is at this moment. In short, all the indices have strong upward momentum, so we always go with the movement and never go against a strong trends. All right. Let's move on to commodities, starting with oil. Today there's the crude oil inventory report, so for those of you trading it, be careful. Make sure to note the release time of the report, as it's usually a market mover for this asset. Let's take a look at it from an operational standpoint. It seems to me that here too there's a well-defined range between 63.90 and 62.50, or roughly 62.30. So this is the range to keep an eye on. At the moment we're operating in the upper part. We've basically settled around the middle at 63. So a break below 63 could lead to a test of the lower area around 62.50 or 62.30. While holding that level could trigger new upward movements. On the other hand, holding this level could mean that buyers have already stepped in here to defend this entire area, which previously acted as resistance and now serves as support. This is also confirmed by yesterday's candlestick, which precisely validated this whole zone. Now they're kind of mudding it a bit, but it's still holding around 63.20. So a new upward leg could start from here, supporting this renewed momentum in the stock market. And of course, let's also take a look at gold, which we see here. It was a bit off yesterday, but it still remains quite strong overall. You know, there are certain variables like central bank purchases, basically for gold reserves. So there are factors that go beyond the technical aspects, and well, they're difficult to assess. So let's just look at it from a technical point of view, there was this nice upward surge that brought prices to 3420, the area around 3420, only to then make a sharp move, retesting the highs, overshooting these highs here, but retesting the more recent ones. Very precisely, 350, 360, and then it started moving up again. So now it's testing basically these lows here have held. If these lows here have held, well, now there is basically, if it doesn't go below 373, I expect an attempt at 396, probably with a breakout and a new test of the highs. On the other hand, if they don't manage to break through 390, 395, then probably yes, there will be a bit more of a decline, maybe with another test of the lows area. Well, we still have to look at the SPX, which basically continued its upward movement yesterday. It went en soma to retouch, if you see where it stopped, more or less where it had stopped the other time, in short, completion of that wave that we drew. At the moment, in short, it has rested right on the highs. We will see if they make this same drawing, that then maybe they will re-enter the wave for a bit of retracement. This time, in short, it will be the right time for a breakout. We landed right on top of it, so it's likely we'll see another test of the 5950 area, and then maybe basically be able to start moving upward. Let's see how the market opens today. Of course, we still have to look at Bitcoin. Here it is. Okay, let's take a look at it for a moment. Okay, Wednesday, June 3rd. So basically yesterday it had a bit of a spike upward, went up to 107, basically updating the highs reached at the start of the week. But then, well, it pulled back again to retest the area of its own. You see, this is a triangle, basically the one I'm sketching quickly here, but without really adjusting it much. But I just noticed it now, basically. If we tweak it a little bit, we'll probably find ourselves with a test right in this area here, which then represents the core of this triangle, basically, that we're going to test. So let's keep an eye on it, because, well, it's drawn a bit poorly. I should fix it, but this should more or less be the area, basically. If here it is, basically. Let's do it properly like this. Let's take a minute and make this official. Okay, it should be more or less like this. There's still a little bit that needs adjusting, though. We're gonna test this area here, so we can't really use this drawing as a clear dividing line. At the moment, we're working below, so we might end up breaking through again and testing again. But just keep in mind that from this high, look, all the highs are lower and the lows are also lower. So probably the movement wants to continue, maybe for a test lower down. You can use this as a reference point. It's the 105.4 area. Perfect. We've reached the end of this daily analysis. As always, I invite you to leave a like on the video and follow me on social media. We'll catch up later in the chat. Thank you all for your attention.